Lee, have you sold anything recently?
I have. I did some more selling a few weeks back. I've been selling some of my REITs off. So REITs have been performing very well ever since the bottom of '09. We've been reducing them slowly over the years, but that's generally the place that I'm going for, is in that REIT market. It's done phenomenal. It's up like 15% this year. It's one of the few things that have really done well over the last 12 months. So we might have, 5-6% exposure to that. With new money, I'm not putting anything in REITs, and probably by the end of the year, none of my clients, for the most part, will have any REIT exposure. Too much cash, not enough investments.
Lee, I think something that everyone in markets wants to talk about is Lyft and the general IPO market. What's your take, I guess, two-parter, first on Lyft specifically, but then what you make of the IPO market in general? TradeWeb, another great debut today. It seems like there's a lot of froth in that space.
Oh, there is. I mean, this is, the pride comes before the fall, right? So we've got a situation. In terms of Lyft, come on, you want to buy Home Depot, not Lowe's. You want to buy Uber, not Lyft. I think there's always going to be those two, because Uber always needs competition. When one company has some big PR disaster, it's going to move that business back and forth, and you can't have a monopoly on these things. Here's my problem with Lyft. First of all, I'm not a big user of Lyft, right? I use Uber, and Lyft has a long way of going. The other thing is, I'm not too interested in some of the shenanigans that Carl Icahn was doing, where he's selling his stake, privately right before the IPO and yanking one of his guys from the board. He'll say it's because of the super voting rights. Hey, listen, everybody on Wall Street knows these tech companies want to have total control when they go public. I just think that would be great information. Now, I didn't buy any, but if you're a speculator buying Lyft, wouldn't you want to know that Icahn blew out his position a couple of days before it went public? I mean, I would. In terms of overall IPO market, I mean, I think this is like, the end of the cycle. I would be looking for some of these IPOs to buy 6 to 12 months from now if we get into some real ratty areas. So, yeah. I mean, look at that. It's a lot of money. California is going to do well on taxes.
Don't get me started on these IPOs. And I agree with you, Lee. This is Andy about Lyft. I mean, it's kind of a bit of a racket at this point. I want to go back a little bit to what you're talking about with REITs and selling them out and stuff. So, in other words, that's a defensive position that you were in, and now do you feel more sanguine about growth so that you're stepping on the gas a little bit, or am I reading too much into that?
Reading too much into it. Here's what's happening. I need to get some stock exposure off, and I have to decide where I want to be on the other side of this cycle. I'm not saying credit markets are going to go blow up or we're going to get a 20% decline this year. What I am saying, though, is I believe that REITs are better bought when they're blown up and down 30-40%. And so what I'm doing is I'm saying that it's had this big bump over the past year or so because of the interest rates and because it is somewhat of a defensive position. I think that instead of selling more S&P exposure off, because I'm trying to reduce risk exposure right now, I'm choosing the one area that I want to come back to on the other side of this bull market. Same thing with credit. I don't own any high yield junk right now. In general, I'm not a junk bond player at all, but when you get junk blown up, sometimes you want to be in that trade for 3 or 4 years. So we've been out of that trade for a while, and I'm looking to get back in. So if we really blow up here, the two special situations that I will be looking at are going to be that REIT market and also the high yield junk bond market. But 3,000 on the S&P, I'm reducing more. And mark my words, there's a 50% chance if the S&P hits 3,000 pretty damn quick here, that I might be underweight in equity for the first time in a long time.
Wow, we're going to have to check back in with you then. Hey, Lee, just real quick, financials here. We had a soundbite from Warren Buffett yesterday saying that he likes the banks. We've been focusing on them as we've seen yields bounce back here. Do you like the sector?
I think the sector tells you everything you need to know about the health of this bull market. I want to wait and see next week after we get all the earnings. We've got some stuff coming tomorrow. I am hoping that we'll see the loan books expand, but what would be a real gimme is if we see these loan books not grow or contract a little bit and everybody is exuberant about it. Again, it's all about the sentiment about banks, not really what they're doing. So again, you just have to see how people are at. The fact that Warren Buffett loves the banks right now, That doesn't mean anything. Warren Buffett also said the housing crisis wasn't going to be a bubble, 11 years ago. So,
Take it or leave it. Lee Munson, thank you for coming. Great to see you. Maybe we'll check back in with you. And wow, you could be underweight equities by the next time if we go to 3,000.